Marubeni's story is a classic Japanese business saga, starting in 1858 as a small linen trading venture by Chubei Ito, evolving through mergers and post-war restructuring into a global conglomerate, Sogo Shosha, involved in textiles, metals, chemicals, and beyond, known for its adaptable spirit, commitment to innovation, and expansion into diverse global sectors like energy, food, and digital content. Marubeni, and other Japanese trading houses, or Sogo Shosha, shifted away from heavy capital-intensive ventures before 2013 due to past negative experiences from the lost decades, a focus on improving capital efficiency, and adapting to changing global markets, aiming to reduce risk and focus on higher return, value-added areas rather than just resource ownership. They began selling underperforming assets and strategically reallocating capital to newer growth areas. Partly influenced by experiences from the overinvestment boom in the late 80s, early 90s leading to losses, Marubeni became a major force in food by strategically acquiring U.S. grain giant Gavilon in 2013 for over $3 billion, integrating its massive supply chain, global network, and trading expertise, which, combined with its existing diverse food investments and restructuring success, positioned it as a global food powerhouse with control over production to sales. Marubeni's current ratio fluctuated significantly, starting around 1.0 to 1.5x in the 2016 to 2018 period, dipping lower, then rising to strong levels, reflecting strong liquidity and efficient working capital management, suggest very healthy ratios, showing robust ability to cover short-term debts. Driven by strategic focus on non-resource businesses and cash flow, Marubeni's retained earnings significantly dropped in fiscal year 2020, ending March 2020, due to massive impairment losses, primarily from slumping oil prices caused by the pandemic, leading to huge write-downs, including a forecast 190 billion yen net loss, impacting equity and necessitating major asset reviews. The company reversed its profit forecast to a massive loss, resulting in substantial negative retained earnings and reduced shareholder equity. Marubeni's total equity grew from around 1.74 trillion yen in March 2017 to over 3.59 trillion yen by mid-2025, showing consistent increases from profit accumulation. Though impacted by yen fluctuations and share buybacks, reaching 3,594.4 billion yen, attributable to owners, by August 2025, reflecting strong earnings despite some decreases due to currency translation. Marubeni's revenue declined in fiscal 2024, ending March 2024, due to factors like lower commodity prices, iron ore, coal, decreased profits in some overseas projects, and non-recurrence of one-off gains from previous years, but profits, net income, remained strong and even rose in specific segments due to strategic shifts like investments in fertilizers, spices, and core infrastructure, plus cost management and selling non-core assets, indicating a strategic pivot towards higher value, less resource-dependent businesses despite overall revenue dips. Marubeni's overall profit showed strong growth and stability from 2013 towards 2025, hitting record highs in the early 2020s, with net profits consistently near or above 450 yen to 500 yen billion, e.g. 503 billion yen FY 2024, due to portfolio shifts to non-resource sectors, strategic acquisitions, like electronics, and strong performance in agribusiness, finance, chemicals. While navigating fluctuations from resources, coal, iron ore, and achieving stable earnings, leading to credit rating upgrades by late 2025. while Marubeni's net profit actually rose in the fiscal year ending March 2018, driven by gains in non-resource areas. Its operating cash flow, OCF, and free cash flow, FCF, performance showed mixed results, with some segments facing pressures like pulp price drops and specific losses, leading to challenges despite overall profit growth, requiring strong working capital focus for stability. Marubeni's biggest cash flow use in investing involves capital expenditures, CapEx, in overseas businesses, acquiring shares in equity method affiliates, and strategic investments in growth areas like green businesses, energy, recycling, and existing strong sectors, with large sums allocated annually, e.g. 650 billion yen planned for new investments, CapEx in FY 2025, for expansion and value creation. They focus heavily on growing power, finance, real estate, and green, digital sectors, aiming for long-term value, rather than just resource speculation. Marubeni has a long history of paying dividends, with consistent payouts like 41 yen and 50 sen, September 2023, and 40 yen and 50 sen, March 2023, indicating regular dividend practices for years. They also actively engage in share buybacks, with recent programs in 2023 and 2024. Like one from November 2023 to February 2024 for 20 billion yen and another in May 2023, showing ongoing capital return to shareholders. While dividends are a tradition, buybacks are periodic, with recent approvals happening in early 2025 as well.